All right, let's just jump right into this explainer. Today, we're unpacking something that's absolutely fundamental for any growing business, upgrading your financial engine. We're going to see exactly how ERPNext takes standard accounting, that retrospective, totally tedious chore, and transforms it into a real-time, highly automated strategic engine. If you've ever felt like your finance software is basically just a digital filing cabinet, well, you're definitely going to want to pay close attention to this. So, I want to kick things off by challenging your current setup with a pretty crucial question. Does your accounting system just spit out what happened, or does it actually tell you exactly where the money went and why? Think about it. For most businesses, accounting starts and ends with basic compliance, keeping tax authorities and investors happy. But if your system is only reporting the past, it's never going to help guide your future. To fix that, here's our roadmap for this explainer. We'll start by looking beyond the rearview mirror, then set up our GPS of spending. After that, we'll dive into the immutable ledger, automate our sales taxes, and finally bring it all together in the core financial engine.
Okay, let's get into Section 1, Beyond the Rearview Mirror. Basic accounting is basically like driving while staring in a rearview mirror. It strictly tracks historical compliance and tax reporting. But the ERPNext approach, it's a real-time strategic control panel. By forcing you to stop that backward glance and focus on live data, it actually empowers proactive, data-driven growth. Honestly, it's a total shift in mindset.
Moving right along to Section 2, the GPS of spending.
To really grasp this, picture your company's spending as traffic on a huge, complex highway system. Basic accounting shows you the total volume of traffic, but it has literally no idea where the cars actually ended up. That's where a cost center comes in. It acts as your precise GPS. It tells you exactly which exit every single dollar took. By mapping out a cost center tree, you can tag every single purchase or journal entry to a specific department, a project like a website redesign, or a geographic region. Boom, every dollar gets a specific destination.
But, knowing where your money went is only half the battle, right? You need to know where it should be going. Enter dynamic budgeting. When you fuse those cost centers together with ERPNext budgeting tool, you create a highly accurate financial North Star for everyone in your organization. You can finally ditch those static, disconnected spreadsheets. Instead, you allocate precise targets by fiscal year, tie them straight to those granular cost centers we just mentioned, and track them against specific general ledger accounts. You can even distribute the budget over the year to smooth out those crazy seasonal spikes.
And here is where it gets really fascinating. The system takes that budget and turns it into an active, protective guardrail. It's a true closed loop of control. You aren't just reporting on a budget, you're actually enforcing it. You set the limitations and the system handles the rest. For example, it'll automatically shoot a warning to a manager when their account hits, say, 80% capacity. And even better, it actively prevents transactions from happening if they exceed the budget. So no way a rogue purchase order gets through. That means absolutely no more end-of-quarter surprises.
All right, let's jump to Section 3, the immutable ledger. So ERPNext completely evolved away from letting users just rewrite history. Before version 13, if you made a mistake, you could just post a backdated entry and alter existing data by reposting. But from version 13 onwards, the ledgers are totally immutable. If you need to cancel a transaction now, the system won't just delete it. Actually, scratch that. It can't delete it. Instead, it forces a reverse entry on the cancellation date.
The absolute crucial takeaway here is that an immutable ledger guarantees your historical data is never, ever compromised. Your audit trails are completely unbroken. When an auditor comes knocking, every single action and every single correction is permanently recorded and timestamped.
Now, you might be thinking, why lock it down so tightly? Well, it boils down to 3 massive reasons. First is computational cost. Think about it. If you change something from a year ago, the server literally has to recalculate every single entry that came after it. It's just too heavy. Second, stock valuation. If you're using first in, first out, a backdated entry completely wrecks your inventory valuations and future profit metrics. And finally, tax preservation. It completely prevents the dangerous alteration of taxes that you've already paid for a past period. So it keeps you computationally efficient and legally compliant. Let's look at Section 4, automating sales taxes. Setting up automated sales taxes is shockingly straightforward. You just pop open the Taxes module, hit Add Sales Taxes and Charges template, select On Net Total for the calculation, pick your specific account, and set the rate to 5%. One major thing to remember, though, and the source material highlights this, sales taxes are liabilities for your company. They aren't your money. So you have to ensure that your tax subaccounts live firmly under the duties and taxes header in your chart of accounts, not tucked away in your assets.
And hey, if you need to split that 5% tax, say, into local and central components for intrastate transactions, it's super easy. You just break it into equal parts. You set up a 2.5% central tax and a 2.5% state tax, with both of them pointing cleanly back to those duties and taxes accounts.
By setting up these templates, you completely remove human error from the equation. You can set a template as a default, or you can use tax rules to get super precise. Tax rules let the system look at a specific customer or item and instantly pull the exact right tax template. So the system is doing all the heavy mathematical lifting every single time you spin up a quotation, an order, or an invoice. And finally, Section 5, the core financial engine. Listen, your accounting department does not operate in a silo. In ERPNext, the accounting module is the beating heart of the entire organization. It seamlessly takes activities from buying, selling, stock, manufacturing, and assets, and translates them all into a single, unified source of truth. The minute a piece of stock moves or an asset depreciates, those financial entries are generated in the ledger completely automatically. And because all those core modules feed directly into that highly secure, immutable ledger we talked about, complete with those granular GPS cost centers, you can deploy some incredibly advanced enterprise-grade capabilities. We're talking multi-company setups with consolidated reporting, multi-currency accounting that handles exchange revaluations automatically, and even recurring subscriptions for customers and vendors. It smoothly handles deferred income and expenses, plus it ties right into your point of sale and banking. There's this huge aha moment when you fully implement this. It is literally the shift from basic compliance to a true competitive advantage. When you've got real-time visibility, automated guardrails protecting your budget, and a totally secure audit trail touching every corner of your business, you aren't just doing bookkeeping anymore. You are wielding your financial data like a weapon to outmaneuver the competition. So, I'll leave you to ponder this as we wrap up our explainer today. Take a hard look at your current setup and ask yourself, is your financial engine actually ready to drive growth, or is it just recording history in the rearview mirror? Don't wait around for your next annual audit to figure out your profitability is slipping. Upgrade your engine and take control of your future. Thanks for hanging out with me on this deep dive.